Three. This is the first thing. 3, 2.
Welcome. You're listening to the Best of Investing on Fox News Radio 9:10 a.m. This is the show where we present valuable information about real estate, the financial markets, and other business of the day. For those of you listening for the first time, here is our format. A few guys sitting around a bar having drinks without the drinks. Did you forget to bring the drinks this time?
Darn,
you forgot. Okay. Talking business with you, the audience, the audience is listening in. And I'm Edward Brown, your host, and I'm honored to have as my co-host Mark Hunt of Pacific Private Money, California's premier private lender. Listen up, people. Get a pencil and paper because our new phone number is 888-912-1190. That's an easy one to remember. Write that down, 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. And today's trivia theme is My Era. Music from the 1970s. Love that era.
Oh, yeah.
Okay, the vacations are free. Their only request is a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Our website is bestofinvesting.com. Use let's try this again. You can email questions or comments to Edward at bestofinvesting.com. And check us out on Facebook. One quick reminder, World Wraps in Corte Madera and Santa Clara is still giving our listeners a free smoothie with purchase of a wrap or bowl. Mention the Best of Investing and you'll get a free smoothie. And today's guest, who we're going to have on segments 2 and 3, Stephen and Mike, Stephen Shoen and Mike Samuels, and we're going to talk about divorce and how it affects real estate. They got excellent information for us, but right now we're going to cut right over to Mark Hunt, my handsome co-host.
Oh, gee, thank you. What an interesting week we've had this week. We've had another crazy stock market, down several hundred points again for the week. But the real news is, get this, 30-year fixed rates, 3.75.
I'll take 2 of them.
I'll wager that there's very few people alive today that have ever owned a home with a rate that low.
Oh, how far back do you have to go?
I don't know.
I don't even know if they ever had them that low.
Well, maybe in the 40s, I think.
Maybe.
Yeah. But, of course, now to qualify for that, it's not like it was in the roaring early 2000s where all you needed to do was fog a mirror and show your social security number and you too could get a loan for, up to 100% financing. No, this is full document. Yeah, this is a full doc situation.
What kind of credit score do you need?
I think this one, I was just looking at the rate sheet today, I think that best rate is it's over 700. I'm pretty sure. Again, I'm not a conventional mortgage loan originator. I'm a private money real estate loan originator. So, interesting thing, in our business, Pacific Private Money, we do real estate loans to real estate investors. And the frustrating part for in our business is that we get calls for real estate loans from people who don't qualify for one of these killer loans, and they just expect that the cost of our money in a private money loan, sometimes known as a hard money loan, also should be quite a bit lower than maybe it was, historically. And then the fact of the matter is that there's pretty huge disparity right now between bank rates and private money rates. But then again,
what are the private money rates?
Private money rates, they are coming down. I mean, it used to be 10 to 12, and now it's 9 to 10, maybe 8 to 10. There's pressure on the private money and hard money rates to downward too.
Why don't you give us a quick explanation as to why they're as high as they are?
Well, a private money loan is exactly what it sounds like. It's funded by a private individual. So an individual using their savings or their IRA funds has an awful lot of investment options. They have traditional investment options, which include stocks, bonds, mutual funds, gold, and those right now, we know what the stock market did this week, so it's kind of scary to be in there.
Gold also kind of took a little bit of a hit.
Yes, it did. And then if you wanted to invest in maybe CDs or bonds, those rates are just, it's as close to zero as you're going to find. So people are looking for alternative investments. And they are looking at things like trust deed secured notes, which is what it's called when they invest in a loan, in a real estate loan. So you still have to look at the risk profile, and there are there's investment options out there. There's REITs, there's certain preferred stocks that Ken likes to talk about from time to time that are paying in the 6s, 7s, and 8s, and those tend to be readily liquid, and so in terms of someone funding a private money loan, the return has to be enough to entice them to take what they consider, a risk. They're going to make a loan on real estate. It's not really liquid, and obviously they're taking a chance that the guy's going to make his payments and then pay it off in time.
Yeah, but there's also some advantages to specifically private loans like you're talking about, because the investor knows exactly which one he's going into versus in a REIT, it's very diversified, but it's a pool. He can't figure out, do I want to invest in this one, but I don't like this one.
Well, and I love trusted investments. I think everybody who's saving money should have some of their investment in a trustee secured note. You can get 8 to 10% on your money fixed, and many of our borrowers are A-paper and or what we used to call Alt-A type borrowers, meaning they've got maybe a little ding on their credit, but they, otherwise they've got excellent capabilities. So, but we're really just talking about why is a private money loan still 8 to 10% cost for a borrower when you can go to the bank and get a loan at 3.75.
Well, if you can get loan at 3.75.
And the other answer is most of our borrowers are real estate investors. We're not making consumer home loans to go out and buy a home. We don't make 30-year loans. So there's so the Fed is providing money for those or providing an environment where there's money available at 3.75 to buy your home if you qualify. But on the private money side, which is an industry right now that is thriving, there's more private money loans being funded on a monthly basis right now than probably ever before in history, I would guess.
Well, the banks are just still not lending.
They're very, very stingy when it comes to real estate investors. And so if you're a real estate investor and you want to leverage the money you have into more California real estate, specifically Bay Area real estate, you should be calling a company like Pacific Private Money in Nevada at 415-883-2150 to find out what kind of loan programs you have, short-term, mid-term, long-term, to help you.
Well, that actually gets into, I don't know if you want to get into the email yet, or
no,
we'll save that. It has to do with providing short-term loans and the time period. But the other thing, though, that I like about the trustee investing is that, I kind of imagine it like a CD because it's got a specific term. It's not FDIC insured, but it's backed by the specific real estate because you are the bank. And I guess where the risk really comes in is what kind of loan to value are you looking at? If you're going 90% loan to value, then it's going to be risky. If you're looking at 30% loan to value, it's not so risky.
Right, there's the theory we call protective equity. And when we make a loan that's no more than 65% of the market value, by the math, that means there's 35% equity in the property. We call that protective equity.
And so the market would have to drop at least another 30% from today's value. In order for there to be,
right. There seems to be some consensus that we may be looking at, another 5%, maybe in some markets another 10%. Who really knows? None of our crystal balls are really that clear when it comes to predicting future real estate prices. But I tend to think that we're in. If we're not at the bottom, we're awfully near it, and so the question becomes how long do we tread along the bottom before things start to go back the other direction?
And also the location, because you're not living in Timbuktu, you're living in California Bay Area, San Francisco Bay Area.
Well, that's the other thing too, is we're making loans in cities in the Bay Area that our investors are familiar with. So, for example, we loan in San Francisco, Marin, the East Bay. We're all over the place, the peninsula. And so in those communities, people are generally, they're familiar with the community and they're familiar with the prices and they feel comfortable with them.
Okay, thank you, Mark. And we're going to have to cut to our first commercial break. When we come back, listeners, stay with us because we're going to have Stephen Shoen and Mike Samuels who are going to talk about divorce and how it affects real estate, and they've got some fantastic information for us. And here we go to the first commercial break. And here's your first trivia question. What group sang YMCA in the 1970s and dressed in various outfits such as a construction worker and an Indian? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website again is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What group sang YMCA in the 1970s and dressed in various outfits such as a construction worker and an Indian? One more time, 888-912-1190. Make sure to include your name, address, and phone number, and your email address. And we will be right back